Good afternoon. Okay, everything going? Hey, Ayakame, how are you doing? Didn't see a notification. Click for tomorrow. There is a session tomorrow. I'll tell you more about that shortly. So just stay tuned. I will tell you about that. And KLE, good morning. How are you doing? Had a great weekend. Good to have you here with us again. Hope you're all well. I want to make sure everything's working okay. Just give me a second. Good to hear, Ayakami. Very good to hear. Okay, everything seems to be working well. Alrighty, fantastic. Got it going now. Oh, no, not that yet. Get to that shortly. Okay. Super. Good morning, Moss. How are you doing? I'll catch up with you later at about 5 in 2 hours time, Moss, for our one-to-one session. Okay, good. Everything seems to be working good, working well. Hey, via XP, how are you doing? Alrighty. Good morning, Diana. Good to see you again. Oh, good. Fantastic. Hey, as usual, brand new week. It is Monday, the 8th of January, back on our daily market analysis. How did you all go on the non-farm payrolls on Friday last week? Hope you went okay. So I've done, remember last week, came back into the new markets, looking at the charts, back to it now, gonna start trading, gonna start hammering out trades. So if you're new to the session and you're just joining us on this daily market analysis, whether you are on TradingView, whether you're on YouTube, LinkedIn, TikTok, Twitch, Facebook, wherever you are watching us on, if you're new to the session, do drop a message, say hi, let me know you're here, let me know where you're joining us from. For all the regulars, a big welcome back. Thank you for joining me again. If you can help me out massively, do click that like and subscribe button. And if you have any comments or questions or feedback, do put it into the chat and let me know. Okay? And with that, good morning, Wendy. How are you doing? Hey, Pips Apprentice, good to see you. Hey, Christina, good morning. Good morning, Anthony Anderson. How are you doing? Comment says NFP can't explain, was absolutely flat. It wasn't, or it ended up flat, but it shot up and then it shot right back down and it sat right across, right? So it's been quite interesting. But I'll tell you a bit more about that shortly. Okay, all good. If it's good to go, if you're good to go, put it to the chat. Let me know. Good morning, Mady. How are you doing? Okay, let's keep going. Okay, with that, a quick disclaimer: any information contained on this webinar should not be construed as advice and is presented as educational material only. The contents of this webinar are not intended to be a recommendation to trade a financial product. So please remember that your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. Okay, so that means, what that means is that I will be looking at the markets, I will be looking at the major currency pairs on the H1 time frame, looking for some possible trade setups. If you do get into any trade setups, please make sure you check your trade size, your leverage, your margin. Make sure it fits with your own trading style, your own trading strategy as well. Don't just blindly copy. Okay. With that, let's keep going. Good morning, Buba. How are you doing? Hey, Faith. Good morning. Hey, David. Hope you're well. Now, looking at this, okay, before I get to that, just wanted to tell you a bit about what's happening tomorrow. So you might be on TradingView, you might be on YouTube, wherever you are joining us on. Just want to let you know that tomorrow I will be featuring on the Easy Markets TradingView stream. Right? It's exactly the same time. It's going to be exactly the same time, but it will be on the Easy Markets stream, the one with a special guest. I am the special guest. So I'll put in the link there for you guys to join for tomorrow, 3 p.m. GMT plus 8. Okay, so just remember, tomorrow it won't be on my TradingView, it won't be on my YouTube, it will be on that link there for you guys. I'll be streaming together with Darius on Easy Markets. So watch out for that one. Okay, let's see whether we can bring that up. There. So you see that picture there? That's the one I'll be doing tomorrow. Okay, put a little rocket ship button to that as well. So again, remember, if you can't help me out, click that little rocket ship button, click the thumbs up button, click the like button, click something. Helps the algorithm, helps us get found better. All right, now with that said, coming back to the news. What happened on Friday? I'll repeat that part again just for everyone who has missed, in case you missed out on it towards the end of the session again. Hey White, how are you doing? From Nigeria, good to have you. Hey Erwin, hey Jimmy, hey Serene, hi. Okay, so what happened last week on Friday? At 9:30 p.m. GMT plus 8, we did have the US non-farm employment change number. I don't think anyone got the exact number, but it was released at 216K, right? It was 199, got revised slightly downwards to 173, and it got released at 216 with a forecast of 168. So what you should gather from this is that in terms of employment change, non-farm employment change, we have it better than expected and better than previous. Right? Better than expected and better than previous because it's 216. And what we saw because of that, I'll zoom into the 5-minute time frame just to show you. On release of the news, this was at 9:30, because it was better than expected, we saw that shoot up. Right, we saw that shoot up on the release of the data. And then what the next thing that we saw was unemployment rate stayed at 3.7%, right? So it did not increase slightly to a 3.8, it stayed at a 3.7%. Again, relatively good news for the US, so that's also the reason why we saw that shoot up. But it started pushing back down almost immediately. Two reasons. One, way outside the Bollinger, right? Outside of Bollinger and at that 103 round number resistance level, resistance area. So tested, rejected, push back down. And then also that we saw average hourly earnings stay at 0.4%. All right, average hourly earnings is wage inflation. Wage inflation staying at 0.4% instead of slowing down to a 0.3. So what this means is that we're seeing wage inflation still growing a little bit stronger than expected. Okay? So because of that, wage inflation, not great news. We saw that push back down. Another reason, another thing you can be looking at as well is that push up, a grab of the liquidity above that resistance before retracing back down again. Okay, back to this 23.6 Fib retracement level again, that area there, tested that area and bounced back up. So that's what happened last week on Friday. Then to add on to the bad news, is ISM Services PMI for the US was 52.7, expected 52.5, dropped right down to 50.6. Very close to that contractionary phase. Again, bad news. That's why at 11 you'd see that drop on the dollar, pushing right back down again. All right, pushing right back down again. So that's why we see the dollar shoot up. Firstly, because of that 216K number, a big spike up to the upside, failed to break above that 103. Failed to break above that 103 resistance level. To close above that, form the pin bar, wage inflation together with ISM Services PMI coming close towards that contractionary phase, pushing price back down again. Okay, and that's why we see the dollar on the non-farm release push up a little bit before coming right back down again. Now at 102.33. Right, 102.33. If you look at it on the H4 time frame, it's pretty much unchanged since we started. Right, we started the session. We started the live streams on the 4th. No, on the 3rd. I think on the 3rd. At about 102.23. It's gone up a little bit. It's came right back down. It's gone back up, and it's sitting right now at 102.33. So for last week, it's not just Ayakame was saying that NFP was relatively flat. It's not just NFP, but pretty much for the last week. All right, dollar index was trying to find a direction, but sitting right across. That's also one of the reasons why, like for me, I didn't jump straight into it first week back into the new year and started hammering out trades, because as much as I'm trying to identify trends or to look at where prices could head towards, the market itself is looking at identifying, developing the move, developing the trend. That is why we see the dollar index sitting right across. Okay, does that make sense to everyone so far? Hey Desiree, how are you doing? Good to see you. Does that make sense so far? Let me know, put it into the chat. And then while you're doing that, you can see that, because of wage inflation staying at 0.4%, the risk of a inflation staying a little bit high is still there. That's why we're seeing the CME Fed Watch 2 rise from 93.8% to a 95.3% now for the January meeting. So even less likelihood. I mean, we never thought that they were going to cut in January, right? But even less likelihood for them to cut rates in January. Then in March, right, you can see that there is an increased chance that it's going to stay at the current rate. On the 5th of Jan, on Friday, it was 31.9%. A week ago, on the 29th of December, was 11.5%. Right now, to stay at a current rate is 36.2%. So we're looking at a bit of a push back on the timeline for the possible Fed rate cuts. Okay, so about a 36.2% chance that they're going to be holding rates, with a 63.8% chance that they might be cutting rates. But in May, we're still looking at about a 94.4% chance that they will be cutting rates. Okay, so if you haven't read it, if you didn't catch it, let me just do that. Let me just bring something up for you guys. There was that talk, this first quarter, until the Fed cuts rate, it's always the question is always, when are they going to be cutting rates, right? So again, I'll share that with you guys. I did write something up about when will the Feds cut rates, and ultimately, based on my calculations and the way I look at it, it was likely to cut in April, right? It was likely to cut in April, but because there's no meeting in April, then either March. Most likely they're not going to be ahead of time, so chances are in May. Okay, so you can go check that out as well if you haven't already. The link is there for you guys. And that's written on LinkedIn there. Okay, so that's what's happened so far on Friday last week. Any questions so far? If there is, put it in. If there isn't, tell me. Say no questions. All good? Good to get some idea or feedback of what you guys are thinking. Hey Atir, how are you doing? Good to see you. Okay, then with that, today, what do we have today? Bank of Japan. Japan is still on a holiday, right? Japan is still in the observance of coming of age day. I have no idea what that is, but Japanese markets are still closed today. They will reopen tomorrow. For today, we do have CPI for the Swiss at 3:30. So in 14 minutes time, we have the Swiss CPI data to be released month to month, expected to go from a minus 0.2% to minus 0.1%, right? And you can see that, I'll jump ahead. You can see that the Swiss franc is already for this hour now starting to push a little bit to the downside. It's starting to push to the downside because if we do see this come out at a minus 0.1, inflation, CPI is an inflation number. At minus 0.1 is showing that slowdown or that disinflation in the Swiss, and that's why we're seeing that strength come back on the Swiss franc, reducing the need for the Swiss National Bank to hike rates anymore, right? Or to worry, or possibly to worry too much about inflation. So might see a minus 0.1, could see a little bit more downside on the US Swiss franc. Not something that I trade actively on the US Swiss franc. So in about 13 minutes time, that's something that we can look at together if when the number comes out and when we look at the charts and how the price is moving. Okay, fair enough. Then just want to do a quick overview of what's going to be happening for this week. Tomorrow, not much, but on Wednesday, we're going to have the Aussie CPI data to be released. Right, Aussie CPI at 8:30 a.m. GMT plus 8, 4.9 to 4.5 is inflation data going to show a slowdown in inflation growth in Australia. How is that going to affect the Aussie dollar? We'll talk about that tomorrow to prepare you for this news. We have Governor Bailey speaking. I don't think it's a big news. Not really a big one, but we'll watch out for that. But the main thing for this week will be on Thursday, right? On Thursday, CPI data for the US CPI year on year. Look at it. It might go from a 3.1 to a 3.2. I'm not fussing over a 0.1% increase in inflation, but what if it doesn't come out at a 3.2, right? What if it actually jumps a little bit more than expected, right? Inflation might have a bit of a shock and jump a little bit more than expected. That's possibly going to have some big impact on the dollar. So we'll watch out for that on Thursday. And then on Friday, UK GDP and core PPI and PPI for the US. Okay, so a number of news events here for the week. Not a lot of news, but just the important ones being the CPI, still going to have some impact on overall price volatility. All good so far? Okay, now with that, we have 10 minutes to, just over 10 minutes to the news. Let's look at the dollar index first. Take that one away. Today is the 8th of Jan. It's not NFP anymore. All right, we were looking at the dollar index for it to break up towards that 103.50 level. It shot up, didn't happen, came right back down. So we take that away for now. And it's sitting at this level. Let me just check. I'm happy with not having those two. Take those away. That area there is still holding. Hey Jamil, how are you doing? What I'm thinking here is that if I zoom out a bit just to show you, right, you can see that the dollar had a big drop, right? That big drop through December, right? Pretty much from December, it went from start of December was about 104.20, and then it started trading down all the way to 100.6, almost 60, and then now retracing back. Now that level at 102.90 is being held by that 61.8 retracement level for December, right? Fib retracement level, holding prices back. And what you should notice here as well is this. We have this push up, and also we have a bit of a, let me try and draw that out properly. Bit of a flag pattern there, right? And maybe I'll take that away. Let me see how I can draw it better. We have that pattern there. Right, we have a bit of an upward push and then a consolidation right across. So with a flag pattern, it looks like it's sitting in that consolidation. I'll move this right up to here, so 102.70. And you'll notice again, I think it's going to stay within that range because there's no major news, right? No major news that could or that should lead to a break to the upside or to the downside on the dollar. All right, so I think it's just going to sit there in that range. Bring that back. I think it's going to stay within that range. So dollar index is likely to remain within range of 102.20, no, 102 and 102.70, within that range. Yeah. Okay, so dollar index likely to stay within this range. Let me put that in instead. There we go. Take that box away. Right, so firstly, the upside held by that 61.8, the downside held by that 23.6 area, fib retracement area, and that's the upside area. So I think that is likely to stay within that range. The downward trend line, I think we can remove because that's there. We can take that away because it's pretty much broken. I know I'm moving my chart around a bit. Hang on a second. Now I'm looking at whether we can do that. And that's going to hold. And that's fine. We don't need to have that. That doesn't make sense to have it there. So I think that it's reasonable to see it stay within that range. If it does drop there is a bit of an interim level here at 101.45, and to the upside with 103.50. Okay, so ultimately thinking that the dollar index is going to stay within that range. If it does break out, we could see it get to 103.50, or if it breaks out to the downside, we could see it get to 101.45. But for now, for today, I think we're going to stay within this area. Make sense so far? All good? Put it in, let me know. On Friday, we have one of the busiest chat box. Everyone was leaving a comment, everyone was chatting. Today we seem to have gone a little bit quiet. Let me know if you guys are still there. Let me know if the chat is working or not. Okay, I just want to check. Should still be working. Seems like it's working. Okay. Okay, Kelly is here. Good. Just want to make sure that it's working. Okay. When you guys go quiet, I just wonder. Now let me see. I'm happy with that. Now, US Swiss franc is retracing. Let's not bother about that too much. Okay, so Kiwi dollar. On Friday, we were saying that it could push up. What you should have noticed, right? You shouldn't have any trade. You should not have had any trade on the non-farm payrolls based on our analysis that we did on Friday afternoon. Okay, why so? Is because we were looking for the news to push the Kiwi dollar up, to trade up. On the news release, we saw it drop, test that support, and bounce back up. So that should have been invalidated straight away. If you did get into that trade, you would have also made about a 33 pip profit before it came retracing back down. It doesn't look like it's going to be very interesting for now. I think that the Kiwi dollar is right in the middle of that support and resistance level. Okay, and I'm happy with that. Staying within that range. Check this. 23.6 is right, it's broken anyway. Take that away. It's going to stay within this range. Checking the dollar. I'm thinking that I'm actually looking at this point here, right? And I'm thinking that could you actually be looking for a bounce and then to buy it back up in a fashion like that. So 6230, stop loss 20 pips, take profit 40 pips, 45 pips to the upside. So just trying to trade within this range. I don't like trading within the range. I feel that it's, as much as I think that the yen is going to, the dollar index is going to sit right across, I feel that in this case, the Kiwi dollar could sit right across as well, right? So I wouldn't do anything here. I would in fact say do nothing on the Kiwi. Kiwi is ranging, and it's only it's likely only a 70, no, at the best a 50 something pip range. Even if you catch it from there, 50, 60 pip range, not really worth trying to force a trade out. Ranging, so we're looking for reaction at support or resistance level. Okay, you can either be looking for it to test and sell down, right? Or looking for it to bounce and sell back and to buy it back up. But at this point, I wouldn't be focusing too much energy on the Kiwi dollar. Looking at the Aussie instead, all right? Aussie did not break down, but looking at the Aussie instead, you can see that big push to the downside. Now, if you catch all the way down, that's the 38.2 level, right? The 38.2 level, and I zoom it right out to show you here. You can see that it's this area here that is set in a consolidation. Okay, and if I drag this area right across, rather let's do that instead. Drag this area right across, you see it's still sitting in that similar area as well, right? Still sitting in that similar area. So what I would be thinking of on the Aussie would be, could it bounce back up, right? Could it bounce back up? But remember, again, on Wednesday this week, we do have CPI data to be released from the Aussies. Okay, so it looks like we could see a push to the upside in the short term. I'm still thinking that we might see the Aussie drop in the medium to longer term. You could be looking at above that 38.2 level. Stop loss 20 pips. Take profit 40. I'm happy with this point. Let me just check again. 61.8 is right there. So that's my resistance area. I'm thinking something like that point there, 38.2. You can try that. I don't feel super convinced that it's going to push back up. I'll be looking for 6735, maybe a 15 pip stop and a 40 pip take. That's if it stays above 6690. So it's going to range around there. Look for it to push up. Maybe that dollar weakness, all right? If the dollar pushes down, we might see the Aussie dollar push back up. But it's likely to remain within this range. We're looking for a breakout. 6735, 15 to 40. Let's do that. So we're looking to buy at 0.6735. Stop loss 15, take profit 40 pips to the upside. You all know I don't like it when prices are ranging. Okay, it's sitting right there now. Looking for that to push up. Okay, I'm happy with that now. Then on to the yen. Okay, yen came very close. It came down. I thought it was going to push up when it was trying to push back up. Did not happen. Take that away for now. It is pushing up. Let's see this. 38.2 held nice and strong at that point. That's my resistance level here. Catch that and that point. Okay, so what we're looking for, so remember again, Aussie dollar, if that pushes up, is that dollar weakness scenario. Now we're looking at dollar breaks to the upside. That's going to pull the yen up. I could again be looking for 145. 145, stop loss tight, 35 pips, about there. Take profit, you could go to 140. You could go first 90, and then you could go for 140 to the upside as well. Okay, so I identify 90 first, and we'll say 145. Stop loss is 35, take profit is 90, and you could even be looking at a further upside on the dollar yen. Swiss franc, thanks for that, Desiree. Swiss franc is out at 0%. At 0%, so not fantastic at minus 0.1. It came out at 0. Now, if I go back to the US Swiss franc here, you see that pushing, still pushing to the downside. Take that away for now. What you could be looking for here is first move. That first move to the downside, about there. For 8485, that's only a 35 pip, so take that away for now. Go to the M15 time frame. You can see that pushing down. I'm happy with that move lower. Try and catch that move lower. Don't need that. You can see that's 38.2. Breaking that level, you could be looking for that to come down to this level here. Right? Could come down to this point here. Checking on the Bollinger, that's fine. It's 3:36 right now, so it's just over 5 minutes past the news. Looking at the 5-minute time frame here, you can see that it's breaking that point. Right? It's breaking that point and it's held it since, so we could be looking for this to close a bit lower. It needs to break past this point here. Right, it needs to break past 0.8495. Close below 0.8495, we could be looking at a short-term move to the downside on the US Swiss franc. You can see now it's failing to break past that. Several reasons. One, it is a level, right? It is a level that is testing to break, went down, cannot break. It's outside the Bollinger. It's bouncing back up a little bit. It's 3 minutes to the candle close. I think it's going to sit there a little bit, but overall I'm still looking for it to push to the downside. So look for that candle to close. This is on a 5-minute time frame, 15-minute time frame as well outside the Bollinger. So look for that to close below this line here. Then you could be looking at a move like that. So close below 8490, stop loss tight 10. Take profit, go down to 30. That kind of move. Okay. Thanks for letting me know about that, Desiree. Retail sales as well, year on year was, see, look at that. It was a minus 0.1, got revised to a minus 0.3, and then now it's released at 0.7. So again, good news. Retail sales is a major component in GDP. For the economy, so at 0.7, good retail sales number, we should be seeing the Swiss franc continue to push to the downside. Okay, let's keep an eye on that, and then we'll come back to that. US yen, I've done that. Bit of a double bottom, so I'm possibly also looking at this as a little bit of a double bottom at that fib retracement level here, looking for it to bounce back up, break above that support, turned resistance area to push up towards that high or the resistance area. Okay, so that one's done. Then onto the pound dollar. Right, pound dollar in that wide range. Shot down during the news, so that did not happen. Take that away, push back up. If you did get into that trade, you would have 40 pips before it came right back down again outside of the Bollinger. So this is why I use the Bollinger a lot. All right, it really just tells you when to get out of a trade, because that reversal is likely to come back into play. Look, it happened here, outside, came back in. It happened here, outside, came back in, and over. It happened here, outside, came back in. This one, it stayed outside, possibly because of a big news or news event. And again here, outside, came back in. Okay, so I used the Bollinger. There were a lot of questions, both in the Discord channel and sometimes people reaching out to me asking about the how I use the Bollinger Band. It's really there for me to tell me when not to get into a trade. It's too late to get in. Imagine you see that shooting up. What usually happens is, in this scenario, you see price shooting down and you'll be like, oh, it's going down. Should I sell? Should I sell? If you turn on the Bollinger, you see, okay, I've got a support level. It's way outside of my Bollinger. I should not be selling at any of this point here. Anywhere in the price range of 1.2648 to 1.2611, I should never be selling because it is outside the Bollinger. On the hourly chart, it could push back up. Then again, you see it push back up. First hour, you say, great, you would have got in there, made a good profit. You would have got out because it's outside the Bollinger. If you didn't, then when it's outside, you say, I should not be buying anywhere from 1.2728 to 1.2770 because it's outside the Bollinger. Just let it come back in. Okay, so that's a quick snapshot of how to use the Bollinger Bands. Now the pound dollar at the 1.27 level, you can see that the pound dollar is in that wide range. I do want to see it come back down, right? Because it's in that wide range, I want to see it come back down. I would say that below 1.2690, you have about a 30 pip stop. And you can have a bit of a 65 pip take profit to the downside, right? Because it is in that range, 50% is a bit done. 50% is done there. 61.8 held strong, so 50 is done, is broken. So we see that test pushing back down. I'll be looking for it to break 1.2690, 30 to 65. Pound dollars sell 1.2650, stop loss 30, take profit 65. Okay. It's 2690. What am I doing? 2690. Alrighty. Question from Diana about the Swiss yen. Okay, so again, I'll jump ahead a little bit first. Swissy, US Swiss franc is coming down, is pushing to the downside. So if you're looking at that trade, we're looking for that to push down. Not a trade I'm getting in because I'm talking to you guys, so I haven't gone into that trade. But if you are looking at the US Swiss franc, that's something to consider. It is on the H1 time frame still within that Bollinger Band, so we still think that it could push down. On the 15-minute, you see that it's outside, so it might bounce back up a little bit. 5-minute time frame, bouncing back up a little bit now, but it looks like it could push down. You want to see that candle close, right? Remember, as much as we're looking at that level, you want to see it close below that level before you get into a trade. Now onto, so you're looking at the US Swiss franc pushing to the downside, some strength on the Swissy. You're looking at possibly the US yen pushing up. Then looking at the Swiss yen, you can see Swiss strength pushing up, yen pushing up, US yen pushing up. We were looking for that test and rebound. It's actually played out right now. So it came down. It took a lot longer than expected. Sat there, it's tested and it's bounced off this support level. If you did that, you're about 47 pips in. This was something we talked about on Friday. Right now at 170. Okay, I think that it could still go up from 170 towards that 170.50.60 level. So about another 60 more pips to move to the upside. But as I was highlighting last week as well, is that the US Swiss franc or the Swiss yen is at a major high. On a daily time frame, you see that we haven't got to this level for ever. Historic high on the Swiss yen. So you want to be extra careful when you're trading towards that historic high. Not saying that it can't break higher, because for every historic high there's something further. Not saying that it can't break higher, but it's going to be super choppy there. It's like how this one broke and then came big retrace back down to about that 38.2 level. Okay, so this could get up to 107.60 to that range there. In fact, I think that it could push a little bit. Oh, nice trade. Entered before from my fair value gap before the news. Very nice. I think that's on a smaller time frame. I think that's on a smaller time frame. Looking at this, how many pips are you in already, Diana? Let me know. At that point, pushing up, we could be looking at a test of that resistance. I would say do nothing right when it gets there. Right? It could break higher, but it's going to be tricky. And because there's no relevant levels higher up, very nice, very good 60 pips there, Diana. I would say 171.50. I always put it at the next, round number level or mid of the round number level. So it breaks above that point, then yeah, we could see that, but I wouldn't try and trade it up. It's going to be super choppy. Right? I'd rather do what you did, Diana, ride it up towards, you have 60 pips now, I would say put it to break even, trade it up towards that resistance level and get out, see whether it's going to retrace back or break up. If it breaks further up, maybe do short-term trades higher towards 171.50. Waited for this from Friday. Yeah, I know. We were talking about it on Friday, looking for that retrace and the bounce. Didn't do anything on Friday, and then on Monday it finally retraced and bounced off that support. So exactly, very good. We'll be out before resistance. Good stuff. Good. Very happy that you're making a good trade on that. I think that you should be looking at about maybe another 30, at the most another 35 pips to go. Yeah, I wouldn't do too near that resistance. Just anywhere near there is good enough. Okay. Couple of digressions today, but that's good. See that sitting right there. Now euro dollar did not break. Very disappointing. I was so keen on that. Did not break, bounced back up. 23.6 right there, sitting at that point. Going to sit in that range, similar to the dollar, sitting in that range. It's going to be a ranging day today. There's going to be, it looks like it's going to be a ranging day today. I would cap it at that point. So euro dollar, only if it breaks above 1.0978, 1.0980. $55 pips to the upside, 20 pips stop loss. No, I wouldn't do that. It's sitting in that range. It could very well test and turn back down. I want to see a reaction at 1.0980. Okay, so it's not going to be an exciting one today. Oops, it's not going to be an exciting one today, I think. But it's ranging and we're looking for a reaction at 1.0980. 1.0980, yep. Does the market usually range in the first 2 months? Not usually. Definitely not the first 2 months. And last year, was it last year or 2 years ago? I forgot. In February, we had the development of the Ukraine war. In January through to February, we had the development of the Ukraine war. So we didn't see that consolidation. It's not the first 2 months, maybe the first week, and a bit as it develops its direction, because there were a lot of things pending from last year. When are they going to cut rates? When they're going to end rate hikes, when they're going to cut rates, all that. And looking at the CPI data, that's why this start of the year with the new data releases, we're looking and trying to develop that overall bias first. Okay, so be extra careful during this period of time. Euro dollar ranging, look for reaction at 1.0980. Keep to that. Yeah, that point there, a rejection, you can look to sell it back down because of the range. Sweezy, look, failed to break below on the 5-minute, did not close below, 15-minute did not close below, so it's bouncing back up again. I would still maintain this short-term view of the Sweezy 0.8490 stop loss. Wait, it's bouncing back up. Bouncing all the way back up now. Okay, let's take that away for now. Let's do another view of that. It's bouncing back up. I do think it's going to come down. I think short-term view is going to come down. Still within that range. The question you might have is, now that it's retracing, could you look to get in a little bit higher up? Maybe. Right? If it retraces, I want to see it retrace back up past that point, 0.85. Okay, so at this point now, we're looking to sell it down. US Swiss franc in profit. Were you buying it back up, Jamil? Or did you sell early? Did you buy it back up or did you sell early on the, because it's retracing, so let me know what you did. Okay, I want to see that trade down to, I won't do that. I'll still maintain that view. Okay, so Jamil's in profit, sold the US Swiss franc to the downside. It's retracing back up, so I think he sold a little bit early there. I would say 15 pips to 40 to the downside. So 8490, 15 to 40. Yeah, I'll see that. So 0.8490, stop loss 15, take profit 40 to the downside. Then onto the US CAD, it is ranging. Hey D-Train, how are you doing? It is sitting right at that resistance there, pushing up. Testing that level. I do think that it's going to push up a little bit. I want to possibly be looking to sell down, keeping within that range. So 1.3395, stop loss 20, take profit 70 to the downside, a bit like that. See that bouncing around, test, and then look for that rejection back down. All right, so 1.3395, 20 to 70. Looking for a bit of a retrace. So I'll sell 1.3395. So that's going to do that. 1.3395, 2270. 1.3395, stop loss 20, take profit 70. Alrighty. Then onto gold. On the lower time frame, look for 1, 2, 3 pen. Okay, cool, very cool. Gold test break. We were looking for it to test and reject 2048 to trade down to 2032. Right? It tested 2048 and beyond, and then came down to 2032. At 2032 right now, going to sit at that point, but we're looking for it to trade down towards 2018. I do think that it might bounce a little bit at this point. Let's just check. Might bounce up to that level, not quite. Okay, I think it's going to retrace, complete the retrace and break down. So it needs to retrace and break 2032 to trade down to 2018. Could retrace to about, even about 2040. So I'm looking at this and I'm thinking gold could retrace to 2040, look for rejection, break below 2032 to trade down to 2018. Okay, there we go. You're most welcome, Diana. So that's what I'm looking for. Essentially, what it will look like, or what I think it will look like, is that it could do that and then that. Right? So it needs to break past that point. So I don't care what it does in the before that. Retrace, I want to see it break past 2032 before I think they can get to 2018. Okay? So hope that answers all your questions about the markets. I don't think it'll be a session where you have many trades today. A lot of it is ranging, so let the price develop. Just a quick reminder for everyone again, tomorrow's session will be on this, on here, with Easy Markets. I'll be featured on Easy Markets during their live stream. So do make sure you join that. It will not be on my Trading View. It will not be on my YouTube. It will not be on any of my streaming platforms. It will be on Trading View here with Easy Markets. Again, the link is going to be there for you guys. I will share that on Discord as well. So if you haven't already, do make sure you join the Discord channel. Okay, I'll put the Discord channel link again for you guys. So the link is there, Diana, for the stream tomorrow, and also I will share that also again in Discord for you guys. Okay, so in the meantime, not a lot of trades, but trade well, trade safe, and I'll see you all on Discord. If not, then I'll see you all tomorrow, same time, different place. Take care now. Bye bye.